evening. You're watching Primetime. I'm Tamanna Inamdar.
And I'm Ayush Shalavadi. Let's have a look at today's headlines. The threat of an all-out trade war between China and the US escalates. Beijing imposes an additional 25% duty on American goods worth $50 billion. Trump says a trade war with China was lost many years ago by his predecessors.
China's counterpunch spooks global markets. US markets open over 1% lower.
Relief for Punjab National Bank. The RBI allows the scam-ridden bank to spread its losses from the 13,000 crore Nirav Modi fraud over 4 quarters. This after the bank committed to honour all the LOUs granted in the alleged fraud.
The RBI Monetary Policy Committee is expected to maintain status quo on interest rates in its policy announcement tomorrow as upside risks to inflation remain.
And private weather forecaster SkyMet predicts a normal monsoon this year. What's more, chances of a drought are absolutely zero. News that will certainly bring cheer to the farmers across the country.
Let's begin with the top story this evening. What you can do, so can I. That's China's message to the United States after it imposed fresh sanctions on over 100 US goods being imported into Beijing in a move that sent shockwaves throughout global financial markets. China said it would not be bullied by the United States. Here's a quick run through on the tit for tat between China and the United States.
The word that I want to use is reciprocal. When they charge 25% for a car to go in, and we charge 2% for their car to come into the United States, that's not good.
All right, the jitters of China's tariff announcement were felt in markets around the world. Romain Bostic of Bloomberg News joins us live from New York. Romain, thanks so much for joining us. I'd imagine, well, Wall Street would be reacting in a particular way to this move. What's it like at Wall Street?
Well, we're seeing a very definitive reaction here. Confusion and uncertainty, those are the two words that we're hearing from traders most often this morning after we got news that China was hitting back. We're talking about a 25% tariff on about $50 billion in goods. That's going to affect primarily the agriculture sector, the semiconductor sector, aircraft, chemicals. Of course, these are the main sectors that we're seeing a sell-off in. As you mentioned, all three of the major U.S. averages down about 1% or more. In fact, the Dow and the S&P back into that correction level territory. We're talking about 10% down from the highs that they hit earlier this year. Even the NASDAQ composite, while not quite in correction territory, it is sitting on the precipice of heading in that direction. People really don't like the uncertainty that this is causing. We're seeing a sell-off in Boeing, which has been the default proxy for the trade tensions between the U.S. and China. Boeing was down as much as 10% earlier today. It has pared some of those losses a bit, but keep in mind, it is America's largest exporter. It's one of the biggest users of aluminum, and it's on its trade with China. There's a lot of concern that companies like Boeing will get hit. We're also seeing companies in the automotive sector, GM, Ford, move on the Chinese export market, also moving low. Some of these semiconductor names, NVIDIA, Intel, AMD, all moving decisively lower today as there are a lot of concerns that the market that most of them are relying on.
All right, Romain, thanks so much for that update. Of course, Tamanna, the jitters are being felt all over, but I think this calls for a debate.
Absolutely. We're going to talk a lot more on the story on Primetime Debate to understand whether a trade war has actually begun, or is it a case of both the United States and China wondering who will blink first. We have a stellar panel for you on the show this evening at 8:30 p.m. Jayant Dasgupta, former Indian ambassador, WTO, Daniel Moss, a Bloomberg View columnist, Raj Bhalla will be joining us on the show, as will Ajay Dua. So do tune in. We'll be talking about the impact on global trade and India as well.
That's a stellar panel on Prime Time Debate. Now, China's move to impose retaliatory tariffs weighed on the Indian markets as well. The Indian equity benchmarks fell most in 2 weeks, dragged by banking and metal shares. Both the indices closed with cuts of more than 1%. Agam Vakil sums up the day's market action in this report.
Well, weak global cues have bear down in the Indian equities as well. And on the back of that, we're seeing a lot of weakness, about cuts of as much as 1% on the Nifty as well as the Sensex. And what are the sectors that are bearing down on the benchmark indices? Well, we have weakness in the Nifty Bank, which was down 1.5%. And we also had a lot of weakness coming in Hindalco and Vedanta, because of which we saw the Nifty Metal Index decline by as much as 2.7%. Tata Motors and Eicher Motors, of course, from the auto pack, bucked the trend, did well in today's day of trade, and also to a certain extent kept the markets buoyant. But on the weaker end of things, at least among the Nifty counters, we saw a lot of weakness in UPL, which was down 4.3%, and Vedanta down 3%. In the broader markets too, the cuts were deep, and we saw HEG on account of news with respect to weaker pricing in China, and because of that, we see a lot of weakness there. And Hexaware, of course, along with several other mid-cap IT companies, also looking at a bout of profit booking. These are some of the cues that are panning out today. We'll just have to wait and watch as to what this means for markets as we move into tomorrow's day of trade.
Now, amidst media reports of a probe by the Serious Fraud Investigation Office into the 3,250 crore rupee loan sanctioned allegedly on quid pro quo basis to Videocon Group by the ICICI Bank, the bank has clarified that it has not received any communication from the SFIO in the case yet.
Well, shareholders of ICICI Bank have been the big losers ever since the lender was hit by allegations of lapses in corporate governance. Shareholder wealth has been eroded by nearly 12%, or 27,000 crore rupees since the middle of March, that is. The allegations stem from a whistleblower blog that questions investments made by Videocon Group founder Venugopal Dhuth in New Power Renewables, a company founded by Deepak Kochar, the husband of ICICI Bank's Managing Director and Chief Executive Officer Chanda Kochar. So what is New Power? To understand more about the company, we're joined by Sajid Mangat. Sajid?
You know, if you look at what is New Power, it's a wind power company which has projects to the tune of nearly 177 megawatts. If you go to the website of the company, it says that it has projects which are functioning or operational and in progress of nearly 700 megawatts. But what we have been able to find through the note of credit rating agency Care Ratings and the MCA filings is that the total projects which are operational is around 177 megawatts of project which is there. The company began in 2008. Initially, the first founder was Deepak Kochar along with Venugopal Dhuth and Saurabh Dhuth. In Jan 2019, both Dhuths resigned and they had 2 additional directors that came in. Over a period of time, there has been shareholding changes. Deepak Kochar's controlling stake came down after conversion of CCPS, which is cumulative convertible preference shares, which was held by a private equity company, which is DH Renewables. Now, DH Renewables currently owns nearly 55% of the company, while 43% is held by Deepak Kochar and Associates. So that's something, that's how the structure of New Power is.
Now, through this entire news story and, reports of investigations, the question is, what do we know through publicly available records about the company's financials?
If you look at the financials of the company, for the year ended March 31st, 2017, that's the last financials available. It has a consolidated revenue of 210 crores. it has a net loss of around 7 crores. Now this net loss compares to nearly 100 crores of net loss of previous years, but consolidated revenue of 210 crores. This is primarily coming in through two of its subsidiaries, which is New Wind Power and Chanda Urja. These are the two subsidiaries which are into execution of the wind power projects, and that's where the revenues come in from. On a standalone basis, it has very few little revenue there, but a lot of revenue is based on a consolidated, because it has nearly assets in 6 states, and it has this assets spread between these two companies.
All right, thank you so much for that, Sajid Mangat, with all the details of what New Power is all about. Now, the Union Cabinet, chaired by Prime Minister Narendra Modi, has given its approval for right-sizing the Competition Commission of India. That's what they've said in the official press release. The competition regulator will soon have only 4 members, down from 7 currently. Payaswini Upadhyay now joins us with the details. Payaswini, what is the reason that they've cited for this right-sizing?
In 4 words, actually, Tamanna, it's minimum government, maximum governance. That's the reason that, is forthcoming from the press release. Currently, if I can talk a little bit about the number of members that are supposed to be there in the commission, there is 1 chairperson plus 6 members. What the press release has indicated is now that the right sizing will be to 1 chairman and 3 members. It means 4 members in all. And 1 additional vacancy that is expected in September 2018, that won't be filled either. The reason what the cabinet has given in its decision is one that it meets the government's objective is of minimum government and maximum governance, and also in 2017, which is last year, the ministry had revised the thresholds, which is what is known as the de minimis thresholds, which means there were lesser number of deals or notifications to be made to the Competition Commission of India, because those thresholds were revised higher. So what the logic seems to be that given that there are lesser number of notifications that need to go with the Competition Commission of India, there is not a requirement of 6 members. That's pretty much the resultant of the logic that is forthcoming from the press release. They've said that this will result in speedier approvals, given that the quorum will be lesser, the members that needed to be convinced of a particular deal outcome would be lesser, and hence it will lead to a faster decision-making process.
All right, stay on with us, Payaswini. I also have S.L. Bankar, former member of the CCI, who joins us on the phone line for more. Welcome to the show, sir. Do you buy that argument that 3 less members will actually make the Competition Commission of India more efficient?
Unfortunately, no, because what I find is the functioning of CCI has not been properly appreciated by the stakeholders. The number makes no difference, because CCI is an expert body, and the number of members deliberated in collegium, everything, all aspects of the issue. Unfortunately, most of the people think that they want to resolve their dispute between them with the amongst the companies or the enterprises, or one supplier or dealer with the principal, or all those things. Those issues are a large number in this, and when people don't get the relief or what they expect from the court, similar type of relief they expect from CCI. But CCI is meant for a different purpose, actually. CCI is the competition law is an economic law, and it is on research-based, database, and on the long-term issues has to be seen in totality, and then only decision is to be taken. A more number of members makes it more reasoned and rigid, or a strong outcome of the particular issue which is brought before the commission. I don't think the decision making will be faster in number of less number of members, because it makes no difference, because the issues will remain same, and so same issues will have to be deliberated by a large number of members or a smaller number of members. the basic issue is that it has to be analyzed based on the various data and the market situation, and then come to a decision.
Okay, Mr. Bankar, two follow-up questions that I have to your comment. One, what does this right sizing mean both for enforcement and merger control cases? And second part of my question is, to your mind, what then is the real reason for this right sizing?
This is actually, there cannot be any scientific formula to fix the right sizing. What is the right sizing? Whether 2 number is right side, or 5 number is right side, or the 7 number is right side. There can't be any given situation. You can't come to a straight away some solution that 3 will be most suitable, or 5 will be, or 6 as presently is there. 6 members and 1 chairperson. In fact, the members comes from different background, different discipline, different experiences. And when the discussions takes place in the commission, I think every aspect is brought by the various people, those who have a large number of years experience in dealing with various areas. So whether it is a 3 or 6 makes no difference. In decision will have to be taken based on the parameters given in the Act and the inputs and the information available in the market and what the information given by the parties. Whether it is a merger case or it is an antitrust case, the approach will have to be same, because the merger is also scrutinized based on likely dominance or likely having adverse effect in the market. So same parameters will have to be seen with the different situation, because of course the merger and acquisition cases needs to be accorded priority because they have a different purpose. So immediately you may not get the impact, but the delay may cause damage to the parties concerned. So they have to be dealt on the priority, and that's why there is a deemed provision in the Act itself. Antitrust cases needs the investigation and the collection of various information from the market. And based on that, the parties have to be given the opportunities, they have to be heard, and then only decision is to be taken.
Sure. One last question, sir. Would you say, or would you believe that this move would adversely impact the timelines for CCI approval, both again for merger control cases and the antitrust investigations to reach any sort of fruition?
I won't say that it will affect adversely, but certainly this move is, you can't say that it will result in a positive outcome. There is no definite positive outcome also, because whether it is a less number or large number, the process will have to be gone through. So the time taken for such decision will be same. The only thing is the quality of the decision. If it is a more number of the members and chairperson is involved, then certainly there may be a slight delay, because you have to come to a consensus. Because the more the number, it is a known fact that more number will take more time to come to decision, but less number also will have to take the parameters of the same issues, the same way to come to a conclusion. So I don't think it is going to help in taking faster decisions.
All right, so thank you so much for those insights, Payaswani. Thanks for the analysis as well. Now, moving on, the RBI has given its go-ahead to allow Punjab National Bank to account for the losses it incurs due to the Nirav Modi fraud over 4 quarters. Nikunjori gets us all the details in this report.
The Reserve Bank of India is said to have accepted Punjab National Bank's request for splitting losses that it has incurred due to the Nirav Modi scam over a period of 4 quarters. PNB had written to the central bank requesting to allow it to make provisioning for losses after the Nirav Modi scam over a period of 4 quarters. Remember, the government had informed the parliament that Punjab National Bank is expected to report a loss of 14,500 crore rupees in financial year 17-18. After its board meeting, the Punjab National Bank had also said that it would honor LOUs worth 6,500 crore rupees that are due to mature on or before March 31st, and it had also said that it would honor all subsequent LOUs as and when they mature. Now, even when Punjab National Bank would be honoring these LOUs and there would be a cash outgo of 6,500 crore rupees in the Jan-March quarter, this would not reflect in the profit and loss statement of the bank after this subvention has been given by RBI to PNB.
Now, the RBI Monetary Policy Committee started their two-day meet today. The 6-member committee is expected to maintain a status quo on the key rates when they announce their decision on Thursday. But what are the factors at play this time? Ira Dugal sums it all up in this report.
The general expectation is that this will be a bit of a non-event in terms of rate moves. So the Bloomberg poll that we've seen says that everyone expects rates to remain unchanged at 6%. That would be no surprise given the fact that the last reading on consumer price inflation was actually softer than expected. So even those who had started to talk about rate hikes have quietened down a little bit. But this is an interesting juncture for monetary policy. So I'm going to spend a couple of minutes talking about the inflation scenario. In particular, if you look at the inflation picture under the MPC regime, which is now more than a year old, they've actually had a fairly decent run now with inflation staying within the comfort band of 2 to 6%. It hasn't flattened out near that center point of 4%, which is now the endeavor. But in terms of just the comfort band between 2 and 6%, inflation has stayed within that. Actually, if you lengthen out that chart and look at inflation on a longer period, you probably come away with a little bit more comfort, because remember, as recently as 2013, you were seeing consumer price inflation numbers in the range of 11%, double-digit inflation. Well, we are well away from that. So while we are talking about upside risk to inflation, remember that those upside risks are from 4% or perhaps 5%, certainly not the kind of numbers that we had seen in relatively recent years. So we have come a long way in terms of bringing down the level of inflation, which has then led to the question as to whether there's a structural shift in the inflation scenario in India or not, or has this been entirely because of low global crude oil prices or a change in the government's MSP policy, etc. Well, there are two views on that, and I'm not going to go into deep theory on both the views, but the dovish view is coming from Ravindra Dholakia, who, apart from what he has said in Monetary Policy Committee meetings, wrote a paper in the EPW in March where he argued that the drivers of inflation in the current scenario are different, and he seemed to be arguing that even inflation expectations have moderated since the flexible inflation targeting regime was brought in. Michael Patra, on the other hand, continues to argue that it's time to start hiking rates. He believes that the RBI and the MPC may be behind the curve, and he feels that all major indicators of inflation are now converging to above 5%. You can read more about those two ends of the inflation debate on BloombergQuint.com, but it is that debate that the MPC has to resolve as it looks ahead to monetary policy in the new financial year, not just in the current time. Of course, apart from monetary policy, there are two important things to watch out for. One is what they say on liquidity. The liquidity will tighten as the year goes along. Already, it has been moving between surplus and deficit. Does the RBI come and give in a little bit more comfort about structural liquidity that it will provide as and when required? That will be watched out for. And the last debate is on the FI limit in government bonds and perhaps even corporate bonds. The limits are more or less taken up. The debate is as to whether the RBI continues to increase the limit. Remember, in a staggered fashion, we've gone up to 5% of outstanding bonds on government bonds. The RBI will perhaps choose to continue that staggered increase, but the question is, what is the terminal rate at which they want to leave that percentage of holding in the government bond side? On the corporate bond side, you have not seen an increase in the limit all the way since 2013. So lots of arguments that it's about time they did that. We'll wait for their verdict on both those counts on Thursday.
Well, now it's time for some good news for India's farmers. Weather forecasting agency SkyMet today said India is likely to witness a normal monsoon this year. Have a look at this special report.
Pradhan Mantri Awas Yojana has been one of the most talked about schemes of the Modi government. The target was to build more than 2 lakh houses across urban and rural areas in Maharashtra alone. But the picture on the ground seems to be very different, with none of the houses being completed in cities. Purva Chitnis, who's done all the number crunching, has this report.
Under the Pradhan Mantri Awas Yojana, the urban, not a single house has been completed in Maharashtra so far. So now remember, these are the houses that are supposed to be built by the government agencies such as CIDCO and MHADA. So if we look at the data, for FY18, about 2 lakh houses was approved and sanctioned, but not a single house has been completed under the urban scheme, but whereas about 30,000 houses are under construction. And the situation is not very different for the PMAY rural scheme as well. So for the from the target of 1,50,000 houses for FY18, just about 2,000 houses have been completed, so which is like even less than 2%. However, like the overall target for Maharashtra is about 19 lakh houses under the PMAY rural by 2022, and about 11 lakh or 12 lakh houses for the PMAY urban by 2022. The major challenges, what the government sources are telling us, is that the land acquisition and the verification of beneficiaries is actually the reason why the delays are being there on ground. However, the government expects that in FY19 it will pick up pace.
All right, that's all the time we have on Prime Time, but not enough yet explored on the trade wars that are brewing, Ayush.
Absolutely, Tamanna, and that's been one of the biggest stories of the day and for the last few weeks as well. Is this a trade war? Is this what the US wants? Is this what China wants? First, they seemed, well, to be reluctant participants in it, but now it's an all-out trade war. What does this mean for China, for US, for the region, and for India as well? Is there an India angle?
There definitely is, and we're going to explore what that is. I have a stellar panel coming right up. Jayant Das Gupta, Daniel Moss, Ajay Dua, and Raj Bhala are going to join me in talking about what this means for world trade as well as India eventually. Do tune in for that. It's coming right up.